As you already know, we decided today to raise the target rate for the federal funds rate by 1/4 percentage point, bringing it to 1.5 to 1.75%. This decision marks another step in the ongoing process of gradually scaling back monetary policy accommodation, a process that has been underway for several years now.
That was Federal Reserve Chairman Jay Powell after the Fed's move to raise interest rates yesterday. First move this year. Markets under pressure this morning on the heels of that after being weaker yesterday as well. Not a significant move yesterday, but nonetheless on the downside. Joining us right now to talk more about that is Nuveen Asset Management Chief Equity Strategist, Senior Portfolio Manager, Bob Dahl. Bob, good to see you.
Thank you, Maria.
You were expecting an interest rate hike.
Absolutely, like everybody else.
But this market, you're not a fan? What?
Neutral. I think we're in a trading range. We're going to flop around here. Maybe the high in 28.75 in January and the low 25.32 in the correction. That could be the measure we have for months to come. We're just going to bounce around.
So if you're an investor and you're watching the show and you want to be a little bit defensive in a market like this, what do you rotate into right now?
Higher quality. Just make sure the companies you own have decent balance sheets and have decent earnings and are not overly priced, because valuation matters as interest rates and inflation creep higher.
Bob, the Fed was saying yesterday essentially that they think the economy can grow a little more over the next year, a little faster than they thought it could, but they still have a very pessimistic long-term view that we're kind of stuck in a new normal below 2%. Do you think they're wrong about that?
I hope they're wrong about that. And look, this tax bill doesn't solve all our problems, but for the first time, the tax bill we got a couple of months ago gives us a chance to get productivity moving. We've been stuck at 1% productivity. If we can get some intelligent capital expenditures, which this bill promotes, we can get productivity back toward 2, and then we have a higher growth rate than they're looking at, in my opinion.
What about headline risk and regulation risk? Deregulation has been a critical theme for this economy from the Trump administration over the last more than a year. But you see what's going on with Facebook, just irresponsible management with really some systemic problems at that company that investors are just noticing. In a market like this, which looks a little bit rich, are some stocks more at risk of these kind of negative headlines?
That's absolutely true. We've been in an environment, thankfully, where we haven't had to worry about regulation because there have been no new ones, and some of the old ones haven't been enforced, if you will. But now we're in a position, Facebook is a good example, where we're going to have to take a look. And that will cast a bit of a gray cloud over those kinds of companies and perhaps the market as a whole.
Stocks?
Yeah, the big tech stocks that have grown like a weed and aren't domiciled anywhere and don't pay taxes anywhere.
Right.
I mean, this is a place where the government's going to look.
So how do you allocate capital then right now?
So in my view, you de-emphasize some of those stocks. You can still own tech, but you own MasterCard and Visa and Cisco in the value side. You'd be a little more value-oriented in tech. I think you still have to own some financials, Maria. I wouldn't give up on the consumer. Selected places are still good as a result of the tax bill we talked about.
You worried about trade?
You have to be worried about our trade. When you put a tariff is a tax.
Yeah.
Look,
period.
period. Now, I know we got to find a way to go after China because they don't play by the right rules. Everybody sees that, even the free traders. So we got to find out a way to do that. So, we started with a tariff on steel and aluminum for everybody. Oh, wait a minute. Mexico and Canada, you're our friends. We won't go there. Maybe not Europe. Maybe this will get down to China.
That's how I see it. I talk about Facebook. That's potential regulation. I see these tariffs, and now companies have to ask for exemptions, or even countries. That's additional regulation. You're putting up hurdles for, and who does that hurt? It hurts small business. This is something that President Trump knows.
By the way, even those countries that will be exempt, there will be quotas in place. So you will say, okay, Canada, you're exempt from the tariffs, but here's the amount of product we will take in terms of imports. There will be quotas instituted.
And
they don't want overcapacity.
And some of those countries are also talking about taxing those tech companies in Europe as well. Yeah. So that's a headline that
dovetails with what Dagan had to say. I agree with that. That's another little gray cloud over there that we didn't have before.
Bob, great to see you.
Thank you.
Thanks so much, Bob Dahl there.